The Senate passed a critical vote last night to move President Trump's big, beautiful bill forward. They barely made it, but now the bill is now on the Senate floor and is being debated with amendments that are being added. The question I know a lot of seniors have is, what is in the bill for you? Are seniors going to get the Social Security increase and disability increase that was promised? Well, here's what I can tell you. The Senate version of the big, beautiful bill offers more to seniors than the House version. So I'm going to walk you through the differences between the Senate bill and the House bill. And then while they are debating the bill as we speak, I am going to talk about a few things that I think the Senate should add to the bill that will make life much, much easier for seniors and give seniors the real relief that they are looking and desperately needing right now. And the bill will have to go back to the House because the Senate has made so many changes that it has to go back to the House for passage. So it remains to be seen what's going to happen there. But it looks like it is on the path to being passed. So if there's going to be any change, if there's going to be any addition to help seniors, this is the moment that the Senate has to do that. Hello, my name is Kwame Kwade. I am a government benefits expert. For 15 years, I've been helping seniors get the retirement benefits they deserve. I cover topics on Social Security, Medicare, Medicaid, food stamps, and any personal finance issue that affects seniors. I'm also an adjunct professor. I teach finance to graduate students at one of the most prestigious universities in the United States. If you are new here, welcome. I'm glad you're here. Do me a favor, go into the comment section and let me know your city and your state. So let's jump into what's happening with the big, beautiful bill, because I know that is what a lot of seniors have been waiting to hear an update from. And I promised you yesterday that I was going to bring you the latest update from my reporting yesterday. So let's look at what has happened since then. So basically, the bill is now on the Senate floor after they passed a key procedure vote that went to the wire, but they got it done. So now the bill is at the floor. It's being debated. There's going to be tons of amendments. There's going to be a lot of voting. And then finally, it's going to then be put up for a vote. Now, here's the biggest development that happened. I'm going to talk about that in a second. South Carolina Senator Tillis, who was one of the people that voted no yesterday, he and Kentucky Senator Paul, they voted no. And President Trump was really annoyed with Tillis and threatened him with a primary. And then Tillis came out today and said he's not going to run for re-election. So he pretty much caved. But here's the bigger context of that. He voted no because North Carolina is going to lose 600,000 Medicaid recipients if this bill passes. And he released a statement, which I am going to read to you, that he doesn't support the bill because it is making draconian changes and cuts to Medicaid. So he voted no. He wanted it changed. He wanted the bill to be made better. And so he voted no. And he incurred the wrath of the president yesterday. And now he announced that he's not going to run for re-election. But here's the thing. That does not change the fact that 16 million people are going to lose medical care, medical coverage. And I'm going to talk about that. But let's look at the difference between the House and the Senate bill. So in terms of tax policy, tax changes, the bill in the Senate extends President Trump's tax cuts and makes them permanent. They were supposed to expire at the end of this year. It increases child tax credit from $2,000 to $2,200 per child, adjusted for inflation. The House version only proposed a $2,500 increase, but on a temporary basis. So the Senate is making that permanent. They're also extending and making permanent the standard deduction. And here, they are also giving no taxes on tips and overtime. So for tips, you are allowed to claim $25,000 in tip wages and $12,500 in overtime wages, but they both expire in 2028. Now, the question is, what happened to no tips or no taxes on Social Security? Because remember, when the president campaigned, it was a trifecta: no taxes on Social Security, no taxes on tips, and no taxes on overtime. Well, the no taxes on overtime has made it in the bill, and up to 25,000, and no taxes on overtime up to 12,000, but no taxes on Social Security did not make it into the bill. So your question is why? Well, they came up with an alternative. They are offering seniors in the House bill, and I reported on this yesterday, a $4,000 tax deduction. And the Senate is increasing that tax deduction to $6,000. So if you're a senior citizen over age 65, you can get a tax deduction of $6,000 on top of the standard deduction. Now you're probably thinking, something is not adding up here. They promised no tax on Social Security, which was going to help a lot of seniors. Now that is not in this bill, and now we have a tax credit for seniors. There's something also called state and local tax deduction, which allows you to deduct your state and local taxes from your federal income tax report. The cap is 10,000. That has been raised to 40,000. This has been one of the most contentious things that was debated. Why? Because people who live in high cost states need this. So it's going to benefit homeowners in high tax states. So I'm going to review everything, the differences between the two, and then I'm going to talk about why seniors are being let down again, and why seniors were promised something and they were giving something else, and why what you are being given is worse than what you were promised. So stay tuned. But let me just go through the differences in the two bills. Let's talk about Medicaid. Work requirement. It imposes work requirement for able-bodied adults up to age 65 to qualify for Medicaid. So to qualify for Medicaid, if you don't have any dependents, you have to work until age 65 to qualify. That is a 10-year increase. There's exemptions for parents and people with disability. And then there's something very critical that's going to affect rural hospitals. It's called the provider tax. It gradually lowers the Medicaid provider tax cap from 6% to 3.5% by 2032. And it's going to really affect rural hospitals because rural hospitals depend on Medicaid clients to really make it. And so the Senate is sweetening the deal by putting together a $25 billion rural hospital stabilization fund. But a lot of experts that know this space are saying that is going to do nothing, that the Medicare cuts are going to really hurt rural hospitals. And I'm going to talk about that in a second. And then there is food stamps. They're shifting some of the cost to states. Between 5 to 15% of cost in food stamps are being shifted starting in 2028. And then they are putting a work requirement on food stamps. That work requirement is being increased from age 54, previously up to age 54, 16 to age 54. If you don't have a dependence, you have to work to get food stamps, at least 20 hours a week. Well, that age is being increased by 10 years to age 64. So if you're a senior citizen, you have to work to get food stamps up to age 64. There are exemptions for parents, and there may be possible exemptions for Alaska and Hawaii. Now, how does this impact the debt? Well, they are increasing the debt limit by $5 trillion. The House version increased the debt limit by $4 trillion. The Senate version is increasing the debt by $5 trillion. Why? Because the U.S. will run out of money in August if Congress does not do anything. So they're going to add more money to the debt. You remember they were talking about Doge, and Doge was supposed to help us cut the deficit and cut the debt. Well, all that drama with Doge and all that theater now means nothing because they're about to blow the debt again by $5 trillion. There's money for border security, $45 billion for the border wall, $5 billion for customs and border protection facilities, and $10 billion for broader border security needs. So there's going to be more ICE agents. There's going to be a wall that is going to be continued to be built, and then more money for customs. Student loans are going to be overhauled. The Pell Grant program is being kept the same. the House wanted to tweak it, but student loan repayment is going to be overhauled. And then rural hospitals, there is a stabilization fund, which I'm going to talk about. So those are the big items in the bill. So now let's focus on you and the things that you care about, which is what is in the bill for seniors and how is this bill going to impact the lives of seniors? Well, I have good news and I have bad news. The good news is that they are including a $6,000 tax deduction, which I've talked about a few times already, which means that some seniors are going to get relief. So if you make up to $75,000, you have to make $75,000 as a senior citizen to be able to get the entire $6,000 tax deduction. And you heard that right. In order to get the $6,000 tax deduction that was put in the Senate bill to help seniors 65 plus, you have to make $75,000 as an individual. If you're a couple, you have to make $150,000 in order to get the entire benefit. So about 60% of seniors are going to get some relief from that tax deduction. But I know what some of you are thinking. What about those of us who don't file taxes because we don't make enough money on Social Security? You're probably thinking that. Well, you're out of luck. There is nothing for you in this bill. And I know that sounds harsh, but that is the truth. Seniors were promised an increase, and it's not in the bill. 40% of seniors are not going to see any benefit at all because the tax deduction is going to those who file taxes on their Social Security benefits. So if you don't make enough money to file taxes on your Social Security or your combined income, there is nothing in this bill for you. They are actually taking away from you with food stamps, Medicare, and energy assistance, and I'll talk about that in a second. But let's get back to the tax deduction. The reason why the tax deduction is a worse idea is that no taxes on Social Security, even though would not have covered everybody, benefited more seniors than this $6,000 tax deduction. So I don't know why they said they were going to do no taxes on tips, no taxes on overtime, no taxes on Social Security, but they've done the two. They've done no taxes on tips. You can deduct up to $25,000 on tips without getting taxed. No taxes on overtime. You can deduct $12,500 in overtime without getting taxed. But no taxes on Social Security, nowhere to be found. And now they're throwing this shiny object, which is a $6,000 tax deduction that 40% of seniors cannot claim. So what can they do? I told you now that the bill is in the Senate right now. You can call and let them know that you don't agree with this and that you want them to put seniors first and provide real relief to seniors right now. So if you want to call them, the bill is on the Senate floor right now. This is the number to call: 202-224-3121, and they will put you in touch with your senator's office. They're debating the bill. Once the bill is passed, the train has left the station. This is the cornerstone of President Trump's agenda in his second term. And this is the biggest opportunity he's going to get to help seniors. And so if you want them to protect Medicare and SNAP and also do an increase to help seniors, this is your opportunity to do that. Call them today. The switchboard is working. They will pick up the phone. They will connect you to your senator's office and let the pressure grow on them, because once this bill passes, we've missed a big opportunity to really impact seniors. Now, you're probably thinking, what can be done if there's nothing in the bill for low income and middle income seniors? What else can be done? Well, there's a lot they can do. And I'm going to share a few ideas with you because these are ideas that are not new. some of them actually have a legislative name. It means that the bill has already been presented in Congress before. It's just that they have not had the political courage to pass the bill that can help seniors. So I'm going to give you a few ideas that you can put in front of them that they can pass that can help seniors in a real meaningful way. And I'm going to be preaching this until the cows come home, because I am frustrated that these are ideas that they already have in front of them that they can include in this big, beautiful bill that can really help seniors, and they refuse to do it. So the first one is the Social Security 2100 Act. You may not have heard of this before. Well, it is actually a bill that was proposed in Congress. It's called the Social Security 2100 Act. And what this does is that it increases the minimum Social Security benefit that seniors get. There are some seniors that are living in poverty because they don't make enough Social Security income. Now, you're probably thinking, what is the federal poverty level? The federal government each year comes up with a list, or kind of like a chart showing what they consider as poverty. And with that chart, they make decisions about as federal assistance for people and how much assistance you can get depending on how much you make. Well, I am going to show you the federal poverty level chart so that you can see that the government itself knows that seniors are living in poverty and they can do something about it, but they don't. And so let's look at the chart and review that. So I'll pull this on my screen right now so that you can see what the government is saying is poverty in 2025. So here's the chart. I am going to increase it a little bit. Let's see if I can make it bigger. Okay, I'll come back and I'll come back to that. Let's see. No, that doesn't work. All right, so let's remove this. Myself back. So according to that chart, which I couldn't show you, I wish I could, but I'll fix it later. If you are a single person in your household and you make less than $15,650, you live in poverty. Well, if you're a senior citizen and you're getting $1,000 in Social Security benefits, you are living in poverty, according to the government's own data. A household of two, if you make $21,150 or less, you are living in poverty. So the Social Security 2100 Act will raise the minimum Social Security benefit to 125% of the federal poverty level. Now, what does that mean? Well, it means that seniors who are living in poverty and getting the minimum benefit are going to get an increase, are going to get a potential increase. And so that is going to help with that situation. So let me share this with you. Now I've been able to pull it up again. So I will share, this is the federal government and what it considers poverty. This is the federal poverty level. And so I'll pull it up a little bit. As you can see, okay, here we go. So for the lower 48 states, if you're a household of one and you make $15,650, the federal government considers you to be living in poverty. If you're a household of two and you make $21,150, you are living in poverty. If you're a household of four, you make $32,150, you are living in poverty. So the government itself has data showing that seniors are living in poverty because a lot of seniors are getting $900, $1,000, $1,100 in Social Security benefits a month. You are definitely living in poverty. You actually, if you're getting $1,000 in Social Security, you are close to 75% below poverty. So the Social Security 2100 Act, which is a legislation that is in front of Congress, will push the minimum Social Security benefit to 125% of the federal poverty level. Well, what does that mean? Well, going back to the chart that I just showed you, it means that your Social Security benefit will be bumped to $19,560. That alone will lift a lot of seniors out of poverty and give them about a $600 to almost $700 increase in their Social Security benefit. So this is something that the bill has a name and it's in front of Congress. They know this. This can be included in the big, beautiful bill if they really want to make meaningful change and help seniors in a meaningful way. So my point is that throwing a shiny object like the $6,000 tax deduction is not going to help seniors at all because 40% of seniors cannot claim it. But doing something like increasing the minimum Social Security benefit to 125% of the federal poverty level so that each year when the government releases the federal poverty level data, your Social Security benefits are adjusted to 125% if you're getting the minimum. That will bring meaningful change to seniors. That is the first thing they can do as part of the big, beautiful bill. The second meaningful change that they can make right now, as the Senate is debating the big, beautiful bill, is to pass the Social Security Expansion Act. Guys, as I'm telling you, all these legislations have name. You can Google them and you will see that I am telling you something that already exists. The Social Security Expansion Act has been around for a few years now, and it will be brought up to the House or the Senate, and then there will be no movement there. But what does it do? Well, the Social Security Expansion Act will give each senior citizen on Social Security and disability benefits a $200 increase right away. Monthly increase. So your Social Security disability benefits will be increased by $200, regardless of what you're getting across the board. So you get $2,400 increase. This, in my opinion, is something that they can do. Remember, I read to you all the money that is being spent on everything, and this is something that can be done. And you're probably thinking, $200, that's nothing. Well, it's true, but it is more than the $50 in Social Security increase that seniors got this year. So the cost of living adjustment for 2025 was $50. So a $200 increase would be 4 times the increase you got. Meanwhile, Medicare Part B premiums went up by 6.6%. So you can see that while Social Security increase is less, Medicare Part B premium is more. That's the imbalance that seniors are facing. So a $200 increase across the board right away will bring some relief. But there are other things that they can do. And that brings me to the third thing that has been on their radar. They keep talking about it, but never do anything about it. The third change that they can make that will be meaningful to seniors is to increase the minimum SNAP benefit. As I went through the changes, I told you that they're cutting food stamps benefits. And I'm going to talk in detail about that. But I think seniors should be spared. I think that they should exempt seniors from the food stamps cut and the work requirements. I feel like seniors have worked long enough for decades and decades and decades, and to require them to work up to age 64 to continue to get food stamps when the previous limit was age 54. So they're adding 10 more years. They're asking seniors to work 10 more years if you want to get food stamps. I think that is a travesty. Why? Because seniors have worked long enough and paid their taxes and contributed, and now a lot of them are living in poverty. To get a little bit of help, they are being told to go back to work before they can get help. I think that is not fair. But anyway, my point is that the minimum food stamps benefit should be increased to $75 a month, because currently it's $23. If you get the minimum food stamps benefit, you're getting $23, $24. And a lot of seniors, 5.2 million seniors, are eligible for food stamps and have not applied because it's frustrating to apply. There's a lot of paperwork. And then there is the limit, the minimum benefit, because they say a lot of seniors are making too much money to get food stamps. So they give you the minimum benefit of $23. Who can live on $23? And then there's another thing that kicks seniors off the food stamps roster, and is the asset limit. Depending on where you live, food stamps asset limit is about $4,500. It means that if you have savings up to $4,500 in your bank account as a senior citizen, you do not qualify for food stamps. Why is that? Because they think that you have enough money. Why do you need food stamps? But here's the thing: when seniors are saving money, it is because they need the money. In most cases, for emergencies that happen with healthcare. Because even though you're paying your $125 a month in Medicare Part B premium, you still have to pay your deductibles and your co-pays and all the out-of-pocket costs. There's a $2,000 drug limit before Medicare takes over for certain drugs. So if you are taking those drugs, you have to pay the first $2,000 before Medicare takes over. If the drugs you're taking is not part of the ones that they have the cap for, then you're out of luck. You have to pay all the drug costs out of your pocket. Because remember, Medicare does not cover drugs, vision, dental, hearing aids, unless you get a specific additional plan for those things. So my point is, remove or at least cap the asset limit for food stamps at $10,000 to help seniors. So that's the third thing they can do. The fourth thing they can do, if they want to bring real relief right now to seniors, is to put a minimum floor on cost of living adjustments. The proposal that has gotten a lot of popularity and a lot of support in the Senate and the House is to put a 3.5% minimum cost of living adjustment for food stamps, for Social Security. It means that regardless of what happens, seniors would never get below a 3.5% cost of living adjustment for Social Security. What is that going to do? Well, it would make sure that seniors get at least reasonable cost of living adjustments, and in years of increased inflation, they get more. And then another thing they can do, if they really want to bring relief to seniors, is energy assistance. And I'll tell you why. They have been chipping away at energy assistance and really taking it away. Slowly and slowly, they've been reducing energy assistance. But the thing is that energy prices are going up and up and up and up and up. So let me show you a chart that is going to tell you the big, beautiful bill and how much is going to increase energy cost. Here we go. By state. So if you cannot read this, I'm going to read it to you. Let me take it from there because it's not visible, but it shows you what the energy increases are going to be by state. And I'm going to tell you which states are in the top, because this is a big problem. And the thing is that they're going to pass this bill, and all of a sudden your energy bills are going to go up, and now they are limiting energy assistance. And so the point is, how are you going to be able to make it? So Wyoming is going to get a 29% increase, Illinois 25%, New Mexico 24%, North Carolina 18%, Tennessee 17%, Maryland 16%, let me see, Minnesota 13%, Louisiana 10%, Kentucky 9%, all the way down. But the biggest 10 states that are going to see the most increase are Missouri, South Carolina, Delaware, New Jersey, Maryland, Tennessee, North Carolina, New Mexico, Illinois, Wyoming. They're going to see more than a 10% increase in energy costs because tax credits, electricity price tax credits are being phased out as part of this big, beautiful bill. That's why I'm here to bring you the details that the media does not bring you because they will give you the highlights, but buried in this bill are specific things that are going to slowly chip away at the ability of seniors to make a living. And it's not talked about before you get that electricity bill that hits your mailbox and you realize that your energy prices has gone up, but then energy relief assistance has been stripped away. So that is important for you to know that energy prices are about to go up. Now, here's another thing we can talk about, and I feel like that's why I am sharing the phone number with you to call Congress, because they know, Congress knows that the bill is not popular. This is CNN aggregating all the bills that have come out so far about the big, beautiful bill. You look at Fox News, and the Fox News poll, 38% support the bill, 59% are in opposition. You look at the KFF poll, 35% support, 64% are in opposition. So the KFF poll and the Fox News poll are similar. But across the board, a lot of Americans are against this big, beautiful bill. Why? Because it takes away so much from people and takes away from the middle class in order to give to the rich. Now, an analysis was done by the Center on Budget and Policy Priorities and the Congressional Budget Office looking at tax relief. Now, before we go through this chart, I want to show you something else because I think that it will explain what's happening in more clear way. So this chart was an analysis by the Center for Budget and Policy Priorities looking at who is going to benefit from the tax cuts that are part of this bill. Well, if you look, the bottom 20% is only going to get $70. The next 20% is going to get $520. The middle 20% is going to get $1,000. But the highest income earners are going to get the most, $88,000 if you make $1,000,000. If you're in the top 1%, you get $62,000 tax relief. If you're in the bottom, and the bottom means that if you make less than $25,000, you are getting $70 relief. So, how are they paying for this bill? Well, is by taking $1 trillion from Medicaid and a gigantic amount from food stamps. So this analysis by the Congressional Budget Office shows that this number that I showed you, remember the guys that are getting the $88,000 and the $62,000 in relief and the $13,000 in tax relief. Well, where is the money coming from to finance that? Well, for every $1,100 in tax cuts that people over $500,000 get, 715 of that is coming from Medicaid, cuts to Medicaid, and $300 is coming from cuts to food stamps. So you can see the big, beautiful bill takes away money from the poor and the middle and gives it to the rich. And guys, this channel is not about politics. If you've followed me long enough, you know that I don't do that. What I do is bring you the facts so that you are equipped with the information you need, and then you can do whatever you want with it. If you want to make your voice heard, then you can make your voice heard. But I dig for the data, I do the research, and bring you the facts so that you can make an informed decision about it. That's all. That's my mission, because I think seniors have been taken advantage of for too long, and then you're promised shiny objects, and then they don't deliver on it, and then they don't even tell you why. Nobody has explained why no tax on Social Security is not in the big, beautiful bill. I haven't heard it. And so I want to make sure that you guys are getting the information you need. So now let's talk about the Senate. And let's talk about the entire budget, because the reason why they are taking this money is because there is no place else to cut. And usually, they are very open about it. But now they are being very discreet about it because they know that the they cannot extend the taxes the way they want to without cutting stuff from the poor and middle class in order to finance it. So what I'm going to show you is going to be how the budget works and why they are determined, and that the only option they have is to take money away from the middle class, take away money from the low income population in order to finance this tax cut. So I just pull this, and let me see if I can get it for you right now. Anyway, if you have any questions, if you're watching this and you have any questions at all, let me know in the comment section below. If you like what you're hearing, hit the like button, hit the subscribe button. If you are new here, welcome. I really appreciate your support. I really appreciate you being here. And I hope that you're getting value and this is helping you, because my goal is to help you stay informed and give you the information that you need to be able to understand what is happening and what you can do to help change it, because we all can do something to change the situation. So give me a second and let me try and pull this information up so that I can share it with you. All right, so here we go. So another chart that I want to share with you today is how much all of this is going to cost. The Senate is extending the Trump tax cuts is going to cost 1.6 trillion. And then extending the expiring tax cut is going to cost 3.3. That's estimates. The House bill is being estimated to cost $3.8 trillion, and the Senate bill is going to cost 4.2 trillion. And I told you that they are extending the debt limit by 5 trillion. Well, they put the number at 5 trillion because they know they're going to need that room in order to make this happen, because the Senate bill is $4.2 trillion. So my point is that they are going to spend $4.2 trillion, but we don't see any real help for seniors in that $4.2 trillion. And that is what I want to discuss with you, is that seniors are always being left behind when it comes to these things. Promises are made and then nothing happens. So let me know your thoughts. What do you think that should be done? What do you think should be done to bring relief to seniors when it comes to the big, beautiful bill? Let me know your thoughts in the comment section. What would you do different if you were in charge of what they are doing right now in the Senate? What would you do different? I want to hear your comments in the comment section below, because I have been sharing my views with you. I've been sharing my research with you. I want to hear what would you do, or do you think what they are doing is enough? If you think it's enough, I also want to hear from you in the comments, because I know that the audience is across the spectrum. There's a lot of people with different views of what's happening. I want to know what you think about what's happening. Do you think that it is enough? Do you think more can be done? And what would you do if it was your authority to do it? So here is the federal budget. You can see that a lot of money is spent on Social Security and national defense and Medicare, education, interest, and veterans benefits. So if you look at the budget, it makes sense why they are taking from Medicaid and they are taking from food stamps, because Medicaid and food stamps fall under income security. And so that is where they are taking the money from, because they know they cannot touch Medicare. They know they cannot touch Social Security. They know they're not going to touch defense. because the defense lobbyists are going to be all over them. They are not going to touch the interest payment on the national debt because they are not going to default on the national debt. And so then where are they going to take the money from? Well, the biggest buckets is health and income security. And so they are taking from health. And where health is Medicaid, CHIP, and all those programs, income security is food stamps, SSI, and all those benefits. And so that's where they're taking the money from. And so if you hear $1 trillion in Medicaid over a decade, it is because that is where they can take money from, and they're not going to get a lot of pushback because that's a big chunk, right? If you look at Social Security, they're not going to touch that. If you look at Medicare, they're not going to touch that. If you look at interest payment, they don't want to crash the dollar. And so if you're national defense, they're not going to do that. So they are taking from the vulnerable population because the vulnerable population are not going to fight back because there are no lobbyists that are there advocating for people who are on Medicaid or on food stamps. So they know they can take from you and not have any consequence. And so that's what's going on. So here are a few things I want to share with you before we wrap up. How is this all going to negatively affect you? Well, the Congressional Budget Office came up with some estimates to help you. 5 million people are going to lose food stamps. 16 million people are going to lose Medicaid benefits. And why should you care? So I'm going to explain to you. Medicaid is the biggest insurance program in the United States. It's the biggest health insurance program in the United States. No competition. 74 million people are on Medicaid. So they are getting Medicaid in two ways. Number one, by making it difficult to be eligible. Number two, by putting work requirements up to 64 so that seniors will have to work to get Medicaid benefits. And then if you were on the Affordable Care Act exchange and you got health insurance through the Affordable Care Act and you got a government subsidy to help you afford insurance, that subsidy is being taken away. Now, why? Well, in this country, you're either getting medical insurance through Medicare if you're a senior, through your employer if your employer provides medical coverage, through Medicaid, or you can buy it from the open market. Buying it from the open market directly from the provider is very expensive, and that is why the Affordable Care Act created an exchange where the government can subsidize for people who, through no fault of theirs, because their employer doesn't offer health insurance, but need health insurance, can go somewhere and buy health insurance. But as I mentioned, buying directly from the open market is expensive. If you're getting it from your employer, they're able to get a group plan. And so the group plan is cheaper. And then your employer may also chip in some money. Maybe they'll meet you halfway or even cover all of it, depending on who you're working for. But if you don't have health insurance and you go buy it on the open market, you have to pay it yourself. And so the government came up with this idea that, okay, well, we're going to help people buy from the open market, but we're going to give them some government subsidies so that they can afford health insurance on the open market. And then the Affordable Care Act also expanded Medicaid to adults without dependents. Previously, if you're an adult without dependents, you do not qualify for Medicaid regardless of how poor you are. Well, the Affordable Care Act offered states to be able to offer, that's what they call the Medicaid expansion. Initially, only about 32 states volunteered to do it, and it's been creeping up now. I think there are about 9 states that are still left to do that. But a lot of states have joined even since the initial roll. North Carolina was one of them. And the senator from North Carolina, who I mentioned earlier, who is not running for re-election, was talking about that because taking Medicaid away is going to cause 600,000 people to lose benefit. But my point is that people who bought medical care from the exchange are now going to lose their subsidies. So there is 3 categories of people that are going to lose medical care from the big beautiful bill. The first one is people who bought medical coverage through the Affordable Care Act exchange and got subsidies from the government, because the subsidies are going to be pulled and then you're on your own. So when they tell you that they are not taking medical care away from anybody, well, they're making it harder for people to afford it. The second group of people that are going to lose medical coverage are people who have to work to get Medicaid. Now, a lot of you will say, "What's wrong with that?" I don't have any problem with people working to get benefits. I have no problem with that. But what I'm saying is that seniors are being caught up in this, where initially it was age 54 in order to afford to get Medicaid if you're a senior. Now they're increasing that to age 64. So seniors who are in retirement now have to work to get Medicaid. So some of them are going to lose benefit. And then three, there are a lot of people who are on specific coverage with Medicaid that now are going to have to meet extra eligibility requirements in order to get it. For example, parents with kids. It used to be that if you have a kid up to 18, you qualify. Now they are restricting it to, I think, 12 or 13. So they are slowly chipping away at a lot of it, and you put all that together, and 16 million people are going to lose coverage and are going to be uninsured as we go forward. So it is going to be a rough world out there. And for food stamps, what they are doing is that they are pushing some of the cost to states. Food stamp program, since it was started, has been a 100% federal funded program. And it was an entitlement program so that if you are eligible, you got benefits. Now they are going to push about 5 to 15% of the cost to states. And you know what's going to happen? The federal government doesn't have to balance its budget, so they can borrow money and blow up the debt. States have to balance their budgets. And so if you put a burden on states to finance food stamps, they're just going to say they're not going to do it. And so it is possible that some states are going to severely limit food stamps, or they're going to get out of the program altogether if they cannot afford it. And so, again, they may tell you that they are not limiting or taking away benefits, but they are making it harder for you to get benefits, because the states who cannot afford it are going to draw people from the program. So that is the big items I wanted to bring to your attention regarding what's happening to your benefits and what you can expect as this big, beautiful bill continues down the path. So if you want to call them and let them know your frustrations, this is the number to call again. Call 202 224 3121 and let them know they are debating this bill as we speak. And your voice could make a huge difference in helping make this a different outcome. Because, as I said, this is the biggest domestic bill that President Trump can pass. This is his biggest opportunity because it's been passed using reconciliation, and they only need a simple majority in the Senate. Once this train leaves the station, the show is over. And now the pain will begin. And obviously, it's not going to be good. And I want us to be able to push back. And when enough of us push back, they do listen. They do listen. So do not think that your voice cannot be heard. Do not think that is just you and it's not going to make a difference. It will make a difference if you call and make your voice heard. So one last thing I want to talk to you about is about cuts to food stamps. The Houston Food Bank released a statement that has been haunting me since it came out. They said that the Senate is trying to cut about 20% from food stamps, and the House cut about 10%. And the Houston Food Bank said that a 10% cut to SNAP benefit is financially the equivalent of wiping out every food bank in the United States. Think about that. Just a 10% cut to food stamps in terms of money is equivalent to taking out all food banks in the United States out of the picture. That is how much food stamps supports this country and the 40 million people that depend on it. And so it may sound trivial to say, oh, they're only cutting 10%. Well, 10% cut in food stamps is equivalent of taking out all food banks in the country. That is the impact that it can have. And so my point is there's something you can do. You can call and make your voices heard. And the last thing I want to talk about before I go, I have two more things. But first, I want to talk about our partner. You see the number on the screen that always is on my screen when I do my videos. It's to our partner, Chapter Medicare. Now, I know a lot of you get bombarded with Medicare ads and everything, and I've been doing this for 15 years. I would not put a partner in front of you if I did not think they are the real deal. Chapter is different from all the Medicare advisory companies out there because they want to be in your corner and help you get the best out of Medicare. Their whole mantra is to make Medicare simple so they can understand your choices. So I'm going to put a form in the description. You can fill it out and they will reach out to you. It's a free service. And here's the thing. Here are three things you need to think about. Number one, they are the only Medicare advisory company that has access to all 24,000 Medicare plans. Yes, there are 24,000 Medicare plans out there. They are the only advisory company that has access to all of them. Number two, they don't pay their agents to push specific plans. Unlike other companies, they are there to show you what plans are in your local area, what the costs are, what the doctor networks look like, what the hospital networks look like, what the prescription drug look like, and then help you compare that plan to traditional Medicare. And you make the important decision of what you think fits your needs, your budget, and your situation. These guys want to be your advocate. A+ rating with the Better Business Bureau, tons of 5-star reviews. Everyone we've sent to Chapter has had a great experience. And I know you will too, but there's a small window for you to switch to a better plan. So you have to act now. If you're turning 65, these are the guys that can help you sort through all the Medicare confusion. Because here's the thing, 90% of all seniors are in the wrong Medicare plan because it's overwhelming. And some seniors just pick the plan that their friend is on or the first plan that was offered to them, but there's more. And you could get better plans that can better serve you. So call the number, or better still, fill out the form in the description. I'm going to pin it in the comments and you can fill it out and they'll reach out to you and put everything in front of you. And I promise you, they can find you a better plan than what you're on right now. So one last thing, let's talk about Social Security for a second. So this week, you may have heard that the Social Security Trust Fund is going to run out of money sooner than we thought. Specifically, it's going to run out of money in 2033. That is 8 years from now. Well, how did we get here? Well, I know that a lot of you are going to say, well, they took money out of Social Security and they never paid it back. You're right. But that is how the Social Security system works. When there's a surplus, the Social Security Trust Fund is supposed to be invested in treasury bonds, special treasury bonds that are issued by the US government purposely for Social Security to be invested in, excess Social Security money. So yes, the government takes the extra excess, the surplus that comes in, and they use it for other things. But then they write you an IOU to Social Security, which the Social Security Administration can cash out every time they want to support beneficiaries. But there's a real problem happening. There are less people working than are paying into Social Security than are claiming benefits. That is a real problem. People are collecting Social Security longer. In the 1960s, the average person was collecting Social Security for 14 years after they turned 65. This year, the average person who turns 65 is estimated to live for 20 more years. So they are claiming Social Security 6 more years than before. And then the baby boomer generation is also retiring in record numbers. I know when people say this, it kind of irritates some seniors, but it's true. The baby boomer generation is the biggest generation of all. 79 million people started retiring in 2010 or 11, and I've been retiring at 10,000 a day. So there's a lot of pressure on the Social Security system. In addition to the fact that birth rates have fallen dramatically, there was 5 people contributing to Social Security to support every retiree in the 1960s. That number has dropped to 2.7. So there's less people contributing that are supporting current retirees. People are collecting benefits longer, and the baby boomer generation is retiring in record numbers. Birth rates have fallen dramatically. And so you put all that together, and Social Security is under real stress. So tomorrow, in my live presentation, I'm going to talk about the 7 things that can be done to fix Social Security, like right now. I'm not talking tomorrow. I'm not talking next year. While we are passing big bills and national debt busting bills, we might as well also fix Social Security for the long term. And there are things that Congress can do, and they fall in 2 categories: either bringing more money into the system. There are things that they can do to bring in more money into the Social Security system, or slow down how much money is going out of the system, which I know you're not going to like, or a little bit of both. But there is something that can be done. But that was the breaking news this week, if you didn't hear. And so I want to bring you details about that tomorrow in my live. I'm going to share with you 7 things that can be done. So make sure that you're here tomorrow on my live, and I will be sharing that with also an update on what's happening with the Senate. Did they pass the big beautiful bill? Well, they were debating it. They didn't have the votes, but they were confident that they will. And you know what? When it comes to Republicans, they make a lot of noise, but generally they all fall in line. So I'm not going to be surprised whatever happens. It may pass, it may not pass. I am hoping that it does not pass so that they can make changes to it that can help seniors in a meaningful way. And as I said, I am not here to talk about politics. I'm here to bring you facts so that you can make your informed decisions. But sometimes the things that are happening are not good, and it's okay to say that they're not good. It doesn't mean that I'm against one political party or another. It's just that when I see something that is happening that is not good for seniors, I'm going to call it out. And I know that it makes some people uncomfortable, but that is how we all get the right information we need to be able to then, push politicians to do something that actually makes a difference in the lives of seniors. So, thank you for hanging out with me this Sunday afternoon. And I'm looking forward to seeing all of you tomorrow when I talk about breaking news, give you an update on what's happening with the big, beautiful bill, and then talk about how we can fix Social Security for the long term. See you tomorrow.